Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayson and thank you for joining me. Well, overnight the Australian dollar crushed the 65-cent level and plunged to a low around 64.50-60 area. And from there still remains somewhat heavy as the market looks towards the downside target seen around 64 cents or maybe even lower to the objective, which I'm still viewing around 63 cents. In light of the pattern, the strength of the ADX continues. Along with that, with the MACD married to the RSI, does support the bearish case and to eventually reach its objective. Looking to the euro, the market stabbed a low of around 106.30-35 area and posting a 2-month low. From there, the market still looks somewhat heavy as the dollar index, which measures the greenback strength against a basket of 6 major currencies, as it currently holds around 104.20. I feel the upside for the dollar index still remains towards 105.106. Therefore, with the recent support level crushed at 107, the market is now destined for a downward challenge to the objective around 105.80 to 106.20 and reassess from there. But the ADX is a little bit overheating. Nevertheless, the technicals are still somewhat negative. Having 3 days of profit taking as the market pulls back for dollar yen, I feel there is time for possibly a return of demand, and therefore from 138.80 could see a rebound back towards its objective, somewhere around 141 to 142. Still this week we got the US non-farm payrolls, and along with that we await the decision of the debt ceiling as the market looks for the votes and see if they do actually pass the vote and therefore ease the market tension somewhat. Still, I feel the dollar index will gain and yen weakness will return and see if the market can actually rebound. Sterling, holding to 4 days of gains, now may actually see a turnaround. I'm not going to get too bullish at these levels and could actually see a bull trap and therefore send the market away from 124.65.75 and look down towards the region of 123.65 to 122.90.95 where the base holds. Wrapping up with gold and oil, the market staged a further climb since posting this engulfing candle from the key level, which was around 1,928 to 33. Posting a low of 31, the market is gaining a little bit more momentum, but now running into where the resistance holds at 1,966. This could see further weakness, and that is towards the region of 1,950 and maybe even back towards that bottom side. Let's see if the market can actually maintain its bearishness, even though the technicals are a little bit mixed. Wrapping up with oil, we can see that the market's continued its plunge, crushing a level of 69.5, now reveals the key base around 64.60.80. With little demand seen at the moment and also a little bit oversold with an ADX trending, the market's most probably going to trade within the boundaries now, 64 to around 69.5 in the coming next 24 to 48 hours. Well, that wraps it for today. Thank you very much for joining me, and as always, grab the intraday report, and I hope you enjoy the great start to the day.